Welcome to Putting the Real in Real Estate, the podcast about all things real estate, all things local, and all things life, where we hope to inform, entertain, and inspire. Hello, everyone, and welcome into episode 11 of Putting the Real in Real Estate. I'm your host, Glenn Hockersmith, and as always, I want to thank you for spending some of your precious time with me today. I hope everyone is staying healthy, mentally as well as physically, as we head into the end of April and look forward to hopefully a much better May, as it seems that we may be able to at least start the process of getting back to normal in May. So today's episode is entitled Weathering the Storm, Part 2, and it's a lender roundtable where I will speak with three of my favorite local mortgage professionals by Zoom call to discuss the current state of the mortgage market and the effect that COVID-19 is currently having on it. Also, we will pull out our crystal ball and discuss what we might expect to see moving forward. So whether you are a real estate professional or someone who is currently in the market to buy or sell a home, or just thinking about it, you won't want to miss today's discussion, which, by the way, will also be posted to YouTube and Facebook. So if you would like to check out the video, links will be posted in the show notes at puttingtherealinrealestate.com. So without further ado, let's get started. All right, I'm going to start by introducing everyone individually, and then we will get started with our roundtable discussion. So first is Brad C. Brad is a mortgage broker, co-founder and CEO of Kentuckiana Mortgage Group, and Brad was featured on episode 5 of the podcast if you want to check that out. Brad, thanks for joining us and welcome in.
Absolutely. Thanks for having me, Glenn.
Next up is Selena Jones. Selena is a senior loan officer and regional manager at TBF Mortgage Company, and she was also featured on episode 6 of the podcast. If you'd like to check that out and learn more about her, Selena, welcome.
Hi, I'm excited to be here. Excited to see friendly faces during this crazy time. So yeah, thanks for having me.
Good. Thanks for joining us. Last but certainly not least is Barry Gary. Barry is a mortgage professional with United Financial Group and an avid podcaster himself. You can check out his new podcast, I Love Kentucky, wherever you download your favorite podcast. Barry, welcome to you.
Well, Glenn, thanks for having me here. I'm glad to be here.
I'm glad to have you. So thanks to each of you for taking time to join us today. The stay-at-home order has been extended to May 1st in Indiana, at least. I'm not sure what the status is in Kentucky as of today, but it's pretty clear that nothing's going to change with that, at least before May 1st. The real estate market, it's still moving, albeit with significantly less volume. I saw the March numbers came out yesterday, and home sales were down 8.5% nationally in March. The NAR is saying sales could decline 30 to 40% in the coming months, I guess mostly because of low inventory. So I'd like to kick this off by just having each of you kind of give a brief update on your business and your current state of operations first. Brad, how busy are you right now? And kind of give us the breakdown between actual resales and refinance.
We're staying pretty busy. Obviously, the pipeline and our pendings have dropped a little bit over March because rates were really good. Bunch of refinances. Things have tightened up a little bit, and I would say it's slowed down, but it's not slow. Right now, we've got everybody working from home. It's kind of our new normal, but we've got everybody set up working from home every day, and things are going well. I think in the future, rates are going to be low, so I'm not doing any refinances right now. I've got one cash out refinance that wants to redo some bathrooms, but anybody that's contacting us for refinance, we're telling them, let's wait. We think rates, we've kind of got it on good authority that rates could hit, 3 or maybe even under on a 30-year fixed in third quarter. So I don't think now is the time to refinance. I think it's a wait and see kind of situation. So 95% of the pipeline right now is purchase still.
Brad, you said a trigger word for me, new normal. We'll get back to that later. But Selena, how about yourself?
Um, well, I mean, things are good. And that's one of the things that I'm trying to share with, my real estate agents that I'm working with and, potential people who want to get pre-approved is that I still have a lot of people applying to get pre-approved. People still want to buy a house, even amongst all of this, craziness and things like we've never seen before. People still want to buy a home. People still want to list a home. I have several agents that have people that are ready to list, as soon as things are, starting to, get a little bit more, and I don't know, like he said, new normal, but, where they feel like they can list a little safer. But I'm doing a lot of pre-approvals. I'm still closing deals. I've got mostly purchases going right now. I've got a few refis sprinkled in there, but throughout my career, I'm really purchase driven. I mean, I love working with my buyers. That's my heart. So, of course, I serve them after they close their deal. Later, if it becomes an opportune time to refinance, I do always follow up with them. But, my main focus is always going to be, on our purchases. And, I'm still very, I'm busy. So I feel like there's hope coming. And, when, some of this uncertainty is gone, I do feel like it's going to open up. And all these people that have been stuck in their houses and doing all these projects, I mean, if you look at Lowe's and Home Depot, I mean, they've been nuts. So people are doing things, it might be a good time to list your home after you've just gotten all your checklists done. So hopefully that's going to happen and we'll all be really, really busy soon. So.
Barry, how about yourself? Tell me what's going on in your neck of the woods.
Well, it's real similar to what's going on with Brad and Selena. I mean, we're still very busy, and and I went back and looked at some of the volume we've had over the past few weeks, and it's really kind of strange. 2 weeks ago, I had 10 loans, and 7 of them were refis, and 3 of them were purchases. Last week I had 10 loans, and I had 7 purchases and 3 refis. And so it's really kind of it's a little bit all over the place. Just depends on your situation. But we're staying very busy. Like Selena, we're still taking pre-approvals, and I'm still, the refis are a little bit different. I'm taking the information, building the file, and saying, hey, let's hold on to this. Let's target a rate. And when that rate comes around, we'll be ready to move on it. And so we're putting people in a position where they can still take advantage of things that happen because, I've seen rates change, a full percentage point throughout the day sometimes. And so you can catch a rate at some point and you look at it 2 hours later and it's something you wouldn't want to touch with a 10-foot pole, but we're still taking applications. We're still, building files. We're doing a lot of purchase work and there's always that it's kind of, I think Selena sort of, kind of alluded to this in that purchase market. There's always that group of people that still have to move. And we're finding a lot of activity in that 250K down range. You've got people their families are growing, they're changing jobs. A lot of things in their life circumstances still put them in a position where they want to move. So we're seeing a lot of volume in that 250K range.
Yeah, I agree. From the realtor side, I tried to shut things down for a couple of weeks and just kind of lay low for a little bit. And people are very persistent out there. If you need to move, you need to move. So last week, I got 3 accepted offers for my buyers. One of the homes that we wrote on had 6 offers on it, and it was in that under $250,000 range that you were just talking about. It was in that 170 range. So the market's definitely still moving, but it is anything but business as usual. There were 22 million new unemployment applications over the past month. And I think the unemployment rate is somewhere around 13% right now, which is like crazy high. And I think it's definitely going to go up. But have you seen the effects of this already on your business? Have any of you lost clients that were previously qualified and who are not now? And whoever wants to take that, go ahead and run with it.
Well, I'll just throw something out there real quick. And one of the things I'm working with all my realtors on is telling them, if you had somebody that was pre-approved 2-3 weeks ago, now's a real good time to touch base with them to see, if their circumstances are the same relative to some of the new guidelines. It's, and not every lender is following a lot of the new overlays, but most of them are being a little bit more consistent with it. And you may have approved somebody with a 240, a 640 credit score 2 weeks ago that will have a hard time getting into a loan today. So, the big thing is just, keeping the communication open and checking with your clients and just kind of taking another look at them relative to where we are today with some of our guidelines, because things certainly have tightened up a little bit.
Brad, how about you?
Yeah, unfortunately, we've lost a few deals, people getting furloughed, beach building tools shut down. They had a confirmed case and shut down, which cost one of my clients a house because of that shutdown. So that's happening. But, like Barry said, it's just conversation. We're pretty much asking everybody that, is up asking us for an updated pre-qualification letter. Okay, I'll be happy to send this to you. Has your income or jobs, current job status been impacted by COVID-19? So loss in hours, reduction in pay. We've kind of seen employers run the gamut on things that they're doing to try to keep their businesses open. And unfortunately, if your income is impacted by it, you can no longer qualify at this point.
Selena, anything to add to that?
Fortunately, I've only had one deal where I wasn't able to close because the buyer lost their job in association with all of this. I've had a couple of times where they've had some reduction in pay and we were still able to make it work. So I've been really fortunate. For the most part, a lot of my buyers are still able to work, whether it be from home, and so they're still getting paid. So that's been good. I agree. Anyone who I have within the last couple months pre-approved, you definitely want to, confirm that before we write an offer, because situations have just changed. Nice thing about me, and I know Brad, I don't know much about what Barry does, but I have different mortgage companies that I broker through. So I have options, and that's kind of nice. So there are different lenders who are handling the overlays a little bit different. Some are being much more conservative than others. So that allows me to be able to kind of see if I can shop around and find a bank that's still going to be, able to work with that buyer.
Yeah, I had a situation where I have a listing and we've been under contract. We've been through inspections, been through appraisals, and they were using a local bank. And this particular buyer happens to work for a company who builds parts for Ford. So naturally, Ford shut down. Well, they got shut down. She got laid off, and without that VOE, we couldn't move forward. So this bank was going to try to maybe see if they could move her to one of their portfolio loans, and it still just wasn't going to work. So, we had to make a decision on the seller side. Okay, what do we do? Do we cut this person loose and put the house back on the market? And this was right when the latest executive order hit, where they kind of said, we don't want you meeting in person, showing homes in person unless it's absolutely necessary. So I had the discussion with my sellers, and we felt like it was probably in our best interest to just extend this contract, because the buyer had kind of a commitment date to return to work of May 6th, I believe it was. So we decided, hey, let's extend this contract 2 weeks. And then in 2 weeks, which I think is here in a couple of days, we're going to kind of reconvene, see what the story is on the buyer's job situation. If it still looks like they're going to go back to work on May 6th, then we'll move forward. If not, then, maybe we make another decision. But, like I explained to my seller, if we put the house back on the market, yeah, we could find another buyer tomorrow, but who's to say that buyer's still going to be employed in 2 weeks? So, and then you got to go through, get another appraisal, go through the inspection process again. So, it's kind of, you kind of have to make decisions on a case by case basis there. So I wanted to ask you all, do you anticipate lenders adjusting their employment guidelines to account for these temporary layoffs once this is all over with.
And Glenn, I want to throw just something in about what you just said, and what Selena just said before we move on to that next question, because it's a great point that Selena made, that, there are some lenders that have a variety of investors that they can shop with. And I think the Ford example is a perfect example. I mean, we're still doing loans for Ford employees because their union has come back and said, we're going to insure you 40-hour-a-week pay, even if you're not working, through supplemental income. And we're able to use that with some of our investors. So we're still closing loans for Ford employees who aren't technically on the job right now. And so it really depends on the lender you're working with and the investor you have for that loan, because some of those deals can still get done. And it's worth having that conversation with, with someone who can maybe look at your loan from different lender perspectives.
Anybody else have anything to add on that? No predictions on what lenders might do moving forward once this is over, as far as looking at, someone who maybe had a temporary layoff, where before, if you had that interruption in employment, it might blow up the loan. Do you think they're going to adjust to that?
I do, honestly, and that's being optimistic. I think that most lenders are going to be very understanding. At the end of the day, without getting too deep in the weeds of the mortgage process, you can pretty much write a letter of explanation for employment gaps and job history. Before all this hit, people that were in college, you can use that as job history. Like, there's all kinds of creative ways, and you can type letters. And as long as the letter and what you're explaining makes sense, and that you just weren't being lazy and didn't want to work, and you actually, your employer furloughed you or temporarily laid you off for a time being, like, I think that's going to be very easy to explain. And I don't think it's going to hurt people in the future once they go back to work.
Yeah, I agree, because normally, as long as we can document it, a letter from the employer or somebody to show that it's not that the buyer was slacking off and not working, they weren't able to, so that's not their fault. And I think it's just going to take time for us to get back to where we were a couple months ago with employment verifications and all of those things. Getting through this, I think eventually we'll get back into a normal of, how employment is verified and all of those things, but it's just going to take a little bit of time.
And I agree with that 100%. I think we're looking at sort of the new normal for the next 12 months or more. And some of the, some of the tightening of some of the guidelines will probably stick around for a while. And even now, when you think about, states talking about reopening their economies and other people talking about, well, we're going to see a second wave, I think there'll be a little bit of fear in the economy that's going to keep things a little bit tighter for a little bit longer than what we'd hope.
Barry, what are some of those tightened guidelines that you've seen, some of the new requirements or guidelines? I know, especially with some of the government-backed mortgages, those have changed quite a bit, haven't they?
Yeah, there's been a lot of change. And, I think some of the biggest one that affect consumers has to do with credit scores, debt to income ratios. And when you look at, job requirements, especially if you're self-employed, I mean, sometimes you have to really look at how your job will be impacted by what's going on. And I think the assumption for a self-employed, is that you're probably going to make about 25% less. And so unless you can show, a lot of reserves on hand, you're probably going to have to decrease what your usable income is. We're looking for a little bit higher credit scores from some lenders. The debt to income ratios are coming down a little bit for some lenders. So I think the whole package has to be a little bit stronger when you look at a borrower than it did 2 months ago.
Would you all agree with that?
Yeah.
Sure.
One thing that, I'm not always after prior to this is retirement statements, but we can use retirement statements as reserves to make the file look a little bit better. For rainy day, they could have access to that. So I think something's that's important now is for all of us to be getting those retirement statements to beef up the mortgage application as a whole.
So there's a lot of misconceptions right now out there about the market. What are some of the biggest misconceptions right now that you all have heard or seen from potential clients or realtors?
Well, I think one of the funniest ones is that the misconception that the Fed rate and mortgage rates are directly tied together. We had people calling us saying, "Hey, can I get that 0% mortgage now?" And and the relationship's not quite that quite that close. And I think that's one of the biggest misconceptions, that people think, what happens with the Fed rate immediately and automatically impacts mortgage rates, and it's kind of more of an apples and oranges picture.
Yeah, I know there when all this really first started and everybody saw that the Fed dropped their rates to zero. I saw all of my lender friends posting on social media. This does not mean the mortgage rate is zero, or it does not necessarily mean the mortgage rates have gone down. So
it's kind of like oil. Oil prices just went really, really low. So now I'm thinking, oh, I should be able to get gas for free.
Sure.
Right.
Yeah, they should pay you to come get gas, right?
Yeah.
So I know there are a lot of people out there right now who are laid off. They're struggling with their income, and maybe they can't make their mortgage payment right now. So what are some of the options being offered to borrowers right now who can't make their mortgage payment? Who wants to take that? No one wants to take that one.
I'll start.
Brad.
Yeah, go ahead, Barry. I'll let you do it.
Well, forbearance is a word that's all over the place right now, and it's one of those options. I saw where just this morning, the president of the NAR put out a statement on forbearance, just to make sure people are very, very clear that forbearance isn't forgiveness, and you do have to pay that money back, and there's very few lenders who are putting it on the end of it. So you may have a 90-day forbearance, and then at the end of 90 days, you got to pay all those payments. And it's there's really a lot of misconception around there, and there's a lot of other options. I mean, people have been staying in their homes longer than they have, traditionally in the past 20 years right now. So there's a big pool of equity for a lot of people in their homes. And I'm not suggesting that you go out and wipe all the equity of your home, but there is some money there that you could use to help you get through a difficult time if you need to. Brad was talking about retirement accounts. There, you can always borrow from your 401k. I think it's the best thing you can do in this circumstance is talk to your lender and say, "Hey, I'm having some difficulties. What are some options I have?" Because the temptation is just to press the easy button and use that forbearance, which may put you in, in a significantly impactful situation a little bit down the road. So I'll throw that out there as a beginning point. And
yeah, I'm glad you brought up forbearance. Yeah. Go ahead, Selena. I'm sorry.
I would agree with Barry, and I think the thing I'm kind of cautioning people is, if there is any way possible that you can continue to make your mortgage payment, I think that is the safest thing for you to do financially, because it's not all clear right now. There's just a lot of uncertainty on how it's all going to be handled. There's a lot of, like he was saying, with, is it a forbearance? Is it a forgiveness? Normally it's going to be a forbearance. Is that going to be reported negatively on your credit report? Is that going to keep you from purchasing or refinancing in the future? We don't have a lot of real clear answers on all of those things. And I don't want to put anybody in a worse situation to have a little temporary relief, unless, if they have to do it, they have to do it, absolutely. But you don't want to get into a forbearance situation where 3 months in, you have 3 months worth of payments and interest coming due. That's a really easy, slippery slope for somebody to then go into a foreclosure and then lose your home because you did that forbearance and then you couldn't pay that to get caught back up. Or, they might stretch it back out and say, "Oh, you can pay it back to us over a year," but still adding that much onto their monthly payment for the next year might be not feasible either. So especially if after this whole coronavirus thing, if maybe they're not working as many hours, there's so much uncertainty. So if they can possibly stay on track to keep paying their mortgage payment as they are now, that is definitely the safest route for them, I think, financially.
Brad, I heard you last week in another call that I was on. You were kind of explaining how it works with loan servicers and their obligation to lenders, and how that continues, right? Can you talk about that a little bit?
Yeah. So the servicers of these mortgages still have to pay the investors whether they receive a payment from you or not. The good news is the FHFA came out yesterday and said that servicers would only be obligated to make up to 3 payments to the investors on their forbearances. So that's still a significant amount of money, because I think I saw that 5.1% of people didn't make their April payment as of the 15th. So there's still a lot of people not making their payment, and that's still a couple months that servicers are going to pay these investors. But at least it gave the servicers direction on what their liquidity was going to look like for the next 3 to 4 months. So even though it's not a good thing, at least now they know what they're dealing with, and they can start working out numbers and see what their financials are going to look like third quarter and fourth quarter. So I think that was a really good thing for them to do, just provide some clarity, and so they can plan for the future, which I think will bring some stabilization to mortgage-backed securities. If not today, in the next coming days, but definitely in the next couple of weeks.
So, and I've heard a lot of people ask this question: why can't we just hit the pause button and just say, all payments are just on pause, not just mortgage, but credit, everything for 3 months, let's say? Why can't we do that?
Well, I think like what Brad was saying, so these mortgage servicing companies, like he was saying, they still have to pay the investors, for the money for these mortgage payments that need to be made. And there's also escrow account issues as well. I mean, taxes and insurance still have to be paid. And if people aren't making their payments, when the tax bill comes due, is there going to be enough money in there? What kind of issues is that going to cause? So it's just kind of a snowball when you get into it, on the problems and the more uncertainty that causes for investors and for rates and everything if people aren't paying their mortgages. So it's kind of a tricky one.
Yeah, and the analogy I use a lot is it's kind of like a stream. What happens upstream affects everything down the flow. And you think about it as an investor, one of the things that keeps mortgage rates low are a lot of investors in mortgage-backed securities. And if you may not be getting paid on your investment after 3 months, it's going to make you a little bit less likely to be an investor in that kind of tool. So, and so it's really one of those things where the downstream effects of just putting everything on pause, again, I don't think it would put us in a situation we'd be very happy with down the road.
So how long do you all think this can go on before we start seeing defaults in large numbers? Any ideas on that? Get out your crystal ball.
Yeah, I don't know. I think, to Selena's point, I think some people are going to take the quick fix and ask for deferment or forbearance. But I think the important thing for us as a society and for the future of the economy is if you can make your mortgage payment, to make it. I know that and I can't speak to them to the letter of what's been written, but I know that there's options on student loans. I know there's options on credit cards. I saw some credit cards are doing 0% till 2022 on all charges. So if there's a way that you can get creative financially and still make your mortgage payment, I think that's the one that you want to keep up with. Because like Selena said, insurance and taxes are still going to come due. And if there's not enough in the escrow account, they're going to ask you for that too. So you don't want the county to have liens against your house. You don't want your insurance to lapse on your house. Like there's just a huge snowball of problems that come with not making those payments. Now, if they're going to defer them or whatever, just make sure your escrow and everything else is in good working order. And I think it's just asking a lot of questions. Don't call your loan servicer and go, hey, can I not make a payment for a couple of months? Okay, good. And then hang up the phone. Like, you need to be asking a lot of questions. What's this look like? When is this going to be deferred? Is this forbearance? What about, like really, really read the terms and really have a lot of discussion around that.
So communication is key, right?
Absolutely.
So I hear someone starting to talk who had something to say.
I was just going to agree with Brad and just say, it really is important to have open communication. I mean, I think all of us would say we're not just a lender for a loan, but we're a lender for life. And anything that happens to a client is, one of the things we do is not just process the loan, but also try to give good guidance and good advice to people. And so just talk with your lender and say, hey, I'm having some difficulty. What options are out there? I think it's probably one of the best starting places before you try to find the easiest way out.
So, and not to, I don't want to be negative here, but I want to be realistic and talk about, best case and worst case scenarios. So let's just say this does go on. It extends for 3 or 4 months. We start seeing a bunch of defaults. Are we going to start, are we going to see lenders fail? Are we going to see it become really difficult for marginal borrowers to borrow money? What do you all see happening? Is it going to be like '08? Worse, better? What do you think? I know we're all speculating. No one can know for sure.
I mean, as far as there's already been a few lenders that do some different kind of like non-QM lending and things that are basically shut down right now because there's just no market for that and no one wants to invest in those kind of mortgages. So the riskier kind of borrowers in that. And it's already harder right now for marginal, buyers that we're kind of on that borderline, to be able to get approved for a house right now. I think that there is a possibility that if the default rate is drastic because of this, that maybe some lenders that weren't prepared for that, could possibly be in danger. Hopefully, that's not the case. Hopefully we get through this and we don't have another repeat of '08, but '08 happened for different reasons. So, this is not about, people necessarily getting into bad loans that weren't good for them financially and things like that. This is about this virus and how it's affecting our economy and how it's affecting employment and all of these things. So hopefully when the clouds part, everything will have sunshine on it and it'll get a lot better.
Yeah, '08 was more of a foundational problem, right? This is more of an external.
Yeah.
And I think it will be
pandemic.
Say that again, Brett.
There's a difference between a housing crisis and a pandemic.
Yeah.
And I think it will be interesting to see what the ripple effect of this is. I mean, even when things start to open up, there may still be some fear and people may start wondering, well, do I want to go back to that job? If I'm working in a job, say I'm working in the concession stand at a major stadium and that was my job. And now, sports are back on and people are coming back in, there may still be some fear of people going, well, I'm not sure I want to do that right now. And so I think it's going to be very interesting and hard to predict. And hopefully, everybody, including lenders, we'll see that it's a very unique situation and there'll be some concessions that are made and some things that'll help us get to the right place.
Yeah. And as we talked about earlier, we keep hearing that term new normal. And I don't know, I like to think of it as just a temporary reality. I don't think this is the new normal. I think it's going to eventually, however long it might take, we're going to go back to normal. So I don't like that term new normal. But I get why people use it. So before we're going to switch gears here in a second, but everybody kind of give me your best case, worst case scenario as far as, how this plays out over here in the next 2 months. Brad?
I think best case is the reports that there may be a lot of people with the antibodies and a lot of people have already had this and they're going to say 70 to 80% at some point have already been affected and 60 to 70% are not asymptomatic and don't really have symptoms. And this may not be as bad as we think it is. And then the government and the governors can slowly start opening things back up. I've seen reports of things in 2 weeks, with like sports and entertainment being the last of once they see things kind of go. So I think the best case scenario that kind of comes out and, that if that does happen, I think things will open back up and kind of get back to what you said, like normal, quicker. Like I said, pretty optimistic about third quarter. I think April and May are still going to be a little slow. At worst case, this is, our new reality for all of 2020, right? Until these biotech companies can come up with a solution or, some sort of vaccine that they can mass produce for everybody. It could be, this could last a while, or it could be pretty short term. I think, the best and worst case are pretty far apart just because there's so much unknown.
Anybody have anything to add to that?
I kind of feel like the next 2 months, this new normal is probably going to consistently be our life, as far as, the restrictions, the social distancing, the, not being able to gather in, fairly large groups. I mean, I kind of feel like we might have a little reprieve for a while, maybe late summer into early fall, where we have a little bit more of a normal. And then I feel like there's probably going to be a second wave, unfortunately, in the late fall and the winter, where we may go back to being a little bit more restricted for a while. And hopefully within, mid 12 months is my guess, when we're like back to normal. I don't know. I mean, that's just kind of from what I've been reading and what I've kind of observed with everything. But, as far as real estate goes, though, fortunately, we don't depend on 50,000 seats in a stadium to be able to do a real estate transaction. So, hopefully we can continue to do what we do, even through our new normals and semi back to normal stages that we may go through over the next few months to a year.
All right, so switching gears here, we're going to get a little bit more on the positive side. What advice, and Barry, why don't you take this one? What advice would you give someone who wants to buy a home when this is all over with? What can they do to make sure that they're in the best shape possible to qualify for a mortgage once this is all over with?
Well, I think that the very best thing you can do is reach out to a lender right now, even if you think you may not be looking for a house for 6 months, to go ahead, reach out to a lender, see what your circumstance is, and then you can put a plan in place that's going to get you where you want to be when you're ready to go out and start looking for that home, because you may need to work on your credit score. You may need to save some money for down payment, maybe some other things, pay off some bills that you need to do, to get your debt to income ratio right. But if you don't have that first initial assessment up front, then you don't want to wait until it's time that you're ready to buy a house to find out that there's some things you need to do that may take you 2, 3, 4 months. Even if it's the horizon's, pretty long on it, go ahead and talk to a lender, get some of the work done and find out, how can I put a plan in place that's going to have me ready when I'm ready to go out and start looking for a house. I think in terms of advice, that's probably the best piece of advice I can give, and it doesn't cost anything, but it can really help you get ready for when the time comes to get out there and start being in the market.
Brad?
Yeah, to Barry's point, I think he's exactly right. That's what people need to be doing, and it's not just the people that have a 635 or 640 credit score to improve theirs. You may have a 700 credit score right now and you can qualify, but if we pre-qualify you now, maybe we can tell you some things to do to get your credit to 740 or 760 to get you a better interest rate whenever that time comes. I think that's something that people don't think about. Like, well, I know I've got a good credit score and I know I can qualify for a mortgage. Well, if you pay this one credit card balance down to $1, cost you $30, we can get you your credit score up and get you a lower interest rate. So you can't contact us too soon. Like, that's not a thing. So like Barry said, just as soon as, if you're 6 months out, let's talk.
Do you agree with that, Selena?
Yeah, I do. And I feel like with a lot of these new guidelines and things that are in place, just being mindful of those things and informing, the buyers that, we need to be very, very proactive. I mean, it's very risky right now to wait until you're ready to make an offer to get pre-approved, because there are so many, different factors that we have to look at that weren't in place 2 months ago. So you definitely want to be prepared. You definitely want to, like he said, it's never too soon to get things in order. So the more time we have, the more time we have to fix things, because you never know. A lot of times I have people who things pop up on their credit report that are fraudulent or whatever the case may be, that they just didn't even know were there. So if you wait until the very last minute, to get pre-approved, we don't have time to fix that stuff. And now you're ready to buy right now. You really love this house, but we don't have time to get things in order to where you need to be. And so it's just about being, in the know and that kind of stuff.
And I've found personally during this time, I'm not spending near as much money as I normally do, right? So if you're fortunate enough to still have a job and still have a steady income, build up those reserves, right?
Mm-hmm.
Absolutely.
All right, so we're going to switch gears and lighten it up a little bit here. So I'm going to ask each one of you, what are you doing to stay sane during this time? What are you doing to keep from going nuts when you're stuck in the house and not able to get out and live your normal life? Brad?
We have a ping pong table. My wife and I have actually been having a ping pong tournament almost every day with a glass of wine. And then on days like today where it's nice, if it's not raining, we're trying to walk at least 4 or 5 miles a day, whether we break that up and do 2 miles in the morning, a mile in the afternoon, 2 miles in the evening. We're trying to get at least 4 or 5 miles in of being outdoors every day, just walking around the neighborhood. So between, still pretty busy in the mortgage world, getting outside and doing some walking and some ping pong tournaments, we're doing okay.
How about you, Selena?
Well, life has definitely slowed down some. I mean, I have 3 kids and all 3 of my kids go to 3 different schools. So typically, and they're all very active. So typically my husband and I spend a lot of time running the kids. And obviously right now we're not doing that. So there is more, I actually kind of enjoy the slowdown a little bit to the speed of things right now and kind of savoring this time with my kids. And we've been, watching movies together as a family, and we've been playing games and, doing all kinds of different things that we haven't always had enough time to do. So that part of it, I'm kind of really enjoying to a certain extent. And, I like to drink tequila. That can keep me sane sometimes. And I do yoga. So, and I have more time for that now I have a whole yoga room in my house. And unfortunately, when the kids are super busy and I'm super busy at work, I don't get down there into that room as much as I would like. And now I have no excuse. I mean, I have nowhere to go. So, I'm able to do that, and that helps too.
Barry, I have a feeling I know what you're going to say, but go ahead.
Well, there's a couple of things I'm going to say, and the first one is, I'm a little envious of everybody that says I have all this extra time on my hands, because what I'm finding out is that I do too much stuff all the time, and I need to have more things to help keep me sane. But business is I'm still working quite a bit. We're still fairly busy, but in the times when I'm not working, I've got 3 podcasts that I put up and manage. I've got a new one I just started. It's called I Love Kentucky, which is all about the people, events, and experiences that make Kentucky a great place to live and visit. I do one called the Louisville Cycling Podcast, which is about our cycling community in Louisville. And then I do one for Norton Healthcare called MedChat that I produce for them, so physicians can get CME credit for listening to podcasts. And then when I'm not doing that, I still ride my bicycle. I get out and 4 or 5 days a week, I go out for 2 or 3 hours on my bicycle, and we're not doing big group rides anymore, but I still get out and try to do that. And then, then I try to get out and take a motorcycle ride every now and then too. I like to ride my motorcycle and can get out and go. And that's probably the most relaxing thing I do. But the biggest thing I'm doing is trying to figure out, why do I keep myself so busy all the time? And I need some quarantine and tequila. Quarantine and tequila.
Right.
A really good day. Yeah.
That kind of brings us to my next question, which is, what's your quarantine drink or food of choice? And Selena's already answered that one. Brad, how about yourself?
Really on the homemade pizza kick lately, and I'm a bourbon drinker for the most part.
Shout out to my Louisville bourbon hounds here.
Yeah, and there's no way I could have a podcast called I Love Kentucky and not be a bourbon drinker. And so
Right.
my go-to is always bourbon. But the temptation being home a lot now is, and now my big goal is not drinking as much bourbon as I want. And so if I do that, I'm doing pretty well.
I'm right there with you, Barry. I stepped on the scale yesterday, and last year I had lost 25 pounds, and I've been doing pretty good throughout this whole scenario here. But for some reason in the past week, I put on like 5 pounds. And so
I can hook you up with a bicycle.
what's that?
I can hook you up with a bicycle.
Yeah. Well, that's funny. I'm exercising. I'm walking every morning, lifting weights. It's just, I find myself eating and drinking out of boredom.
Yeah.
So I'm trying to put the kibosh on that. Anybody else gaining any weight?
I'm not stepping on a scale. I don't even want to know. I don't want to know.
I'm hoping the miles and miles of walking we're doing is keeping me kind of status quo with the, too often not, you find yourself in the kitchen, like, how did I get in here? And like, oh, I'm bored. That's how I got in here.
No, I hear you. So we're going to go ahead and wrap this up. Anybody have any parting thoughts or anything you want to leave us with, or something we haven't discussed that you feel is important?
I think everybody on the panel that you got is in the same boat. We're still closing loans. The media and everybody out there, there's too much misinformation or information that only pertains to one certain company. It sounds like we're probably all brokers. So we've got, lenders that are still doing loans, and we're still closing deals. I scheduled 4 closings for Friday this morning. So I think it's important for people to know that, if you are looking to buy or relocate or do something in the mortgage world or purchase, like we're still conducting business. It's just a different way. But we're still doing things. And I think that's important for people to know.
Yeah, I'll carry on that too. I mean, I feel like business is still good. I mean, my year to date is way up from last year. I mean, has the last 30 days-ish been a little slower? Maybe, not much. I mean, I don't hate to, Raina, I don't know. I don't want to make it sound like I'm trying to make light of everything, but I certainly feel like, we can still operate and do business. And, if you continue to work hard and be there for your clients and, just go out and do what you do every day and still focus on those things, I mean, you can still make a living in this industry right now. So that's a good thing.
And I agree with both Brad and Selena, but I'd also add a big kudos out there to all the realtors, because if we didn't have creative and innovative realtors out there trying to, find ways to show houses, doing things remotely, there's a lot of creativity that's happening right now that's making it, because I don't have any business if there's not realtors who are selling houses. I'm a little bit of refinance business, but it's really kind of impressive to see what's going on your side of things, Glenn, about how people are overcoming barriers, still showing houses, still selling houses, and it's kind of funny. I've got a realtor friend who sent me a picture. She was going to show a house, and she had like her Lysol can, gloves on, her mask on. I mean, she looks like she's ready to go like decontaminate something. But just I'm really impressed with what's going on out there on the realtor side in terms of keeping the ball rolling.
Yeah, I've been there and done that, and I really think that's because most realtors, we're entrepreneurs, right? We're self-starters, we're self-employed. So when challenges are thrown our way, we're going to find a way to overcome those challenges the best we can. So I think that's why you're seeing that. And same with you guys in the mortgage business. So everyone, real quick, I'm going to give you a chance to let everyone know how they can get in touch with you. Brad, what's the best way people can get in touch with you?
Cell phone right now, 812-989-7555, or email brad@kyinmortgage.com.
Selena?
Cell phone as well. My cell phone is 502-810-4687, or email at Selena, SELENA, @tvfmortgage.com.
And I'm going to throw out there, everything I do is I've got a website called barrygary.com. It's BARRYGARY.com. You can find all my contact information there, but just real quickly, I'm also at barry@ufglending.com or 502-593-4497.
And all three of you are consummate professionals. I've worked with all of you. You all do a great job, and no one can go wrong with any one of you. So I really appreciate you spending time with me today. It was very informative, and good luck to you all. And I hope to see you soon.
Absolutely.
Thanks.
Thanks. You all have a good day. All right. Thanks again to Brad, Selena, and Barry for joining us today. And thank you for listening. Please don't forget to hit that subscribe button on your preferred podcast outlet so that you can be sure to get notified whenever a new episode drops. And also, if you have a few minutes, I ask you to go over to podchaser.com, search for Putting the Real in Real Estate, and give me a short review. For every review posted in the month of April, Podchaser will donate 25 cents to Meals on Wheels, and will double that if I respond to the review. Also, my hosting site, Captivate, will match that with another 25 cents up to $750. So that's a great opportunity to not only help out the podcast, but also to raise money for a very worthy cause. Thanks for listening, everybody. Stay healthy, stay sane, and treat each other right. Until next time, have a great day, everyone.